2025 seems to be shaping up to be a landmark year for crypto. From large institutional spot ETF inflows, a new and crypto-friendly administration, to macroeconomic shifts, the stars seem to be aligned for months of green candles ahead. Let's dive into the top reasons why 2025 could be a bullish year for crypto. Crypto markets have historically moved in cycles, and Bitcoin has largely followed its movements from past cycles so far. However, 2025 is when things might get really interesting. Historically, we've seen altcoin rotations and broader market recoveries kick off about a year after Bitcoin halvings, with the April 2024 Bitcoin halving reducing mining rewards to 3.125 Bitcoin per block. We are close to around the 1-year mark since the halving. If the crypto market would follow the script like it has before in 2025, it will mean we could see a much anticipated alt season coming around pretty soon. Another catalyst for 2025 is the surge in institutional adoption. For real this time. In case you've missed it, BlackRock's iShares Bitcoin Trust has accumulated over $37 billion in assets since its launch in January last year. According to a market research report by River in May 2024, 52% of top US hedge funds now hold Bitcoin ETFs. And a research report by OKX and Economist Impact in August 2024 has named a couple institutions that revealed their holdings in Bitcoin ETFs. One of them is the State of Wisconsin Investment Board, who disclosed a $99 million investment in BlackRock's Bitcoin ETF.
Wisconsin's investment board has always been innovative. This is a fully funded pension fund. So in a way, they have the luxury of being able to invest for the long term.
Additionally, the European Investment Bank issued a 50 million digitally native bond leveraging public and private blockchains. And the Hong Kong government raised 767 million with the world's first multi-currency digitally native bond in February 2024. The report notes that institutions are increasingly allocating 1 to 5% of their portfolios to digital assets, with expectations to grow this share to 7.2% by 2027. As an added nugget, staking-enabled ETH ETFs, which can earn investors yield, might be yet another tailwind for institutions to pour capital into crypto. On top of that, a positive change in regulatory tides, which we'll touch on later, may allow us to see more spot ETFs being introduced, such as for Solana. 5 major asset managers, including Grayscale, VanEck, and Bitwise, have already filed applications for Solana ETFs, reflecting growing confidence in the asset's long-term potential. And institutions are not the only ones confident about an upcoming Solana spot ETF either. Prediction markets, such as Polymarket, currently give a 74% probability for the approval of a spot Solana ETF. The success of existing Solana-based financial products like the Grayscale Solana Trust also gives evidence of the ecosystem's popularity. If approved, a spot Solana ETF would likely draw significant institutional interest, much like what we are seeing with Bitcoin and Ethereum spot ETFs currently. The Federal Reserve began cutting rates in September 2024, which marked a significant shift after the aggressive tightening from 2022 to 2023 that brought the federal funds rate to a peak of 5.5%. The Fed funds rate has since been cut down to 4.5%. And at first glance, this seems like good news, as lower rates typically increase risk appetite for assets like crypto. However, in December 2024, the FOMC announced that they are only expecting the Fed funds rate to be cut by another 0.5% or reach around 4% by December 2025, higher than the earlier projected rate of 3.5%. All these combined with Fed Chair Jerome Powell pointing out that the Fed funds rate is now significantly closer to neutral.
It's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral,
while still being meaningfully restrictive, suggests that 2025 might remain to be a relatively higher interest rate period compared to the period from 2016 to 2021. However, GDP growth has remained robust, perhaps thanks to US fiscal policy. In other words, government spending, especially through the US Treasury, has been helping prop up the economy even as the Fed works to control inflation. As long as the government continues its spending programs, it's likely we won't see a recession anytime soon. As long as the US government continues printing money through the Treasury, it's unlikely we will see a recession in the economy, and it doesn't seem like the music is stopping soon. In fact, in early January, Biden signed an executive order that will provide governmental assistance to the AI sector to build infrastructure for their ever-growing need for power and data centers. And besides that, the US government isn't the only one printing money. In November 2024, China launched a $1.4 trillion economic stimulus package aimed at revitalizing its struggling real estate sector and deflationary economy. Despite years of underperformance in Chinese equities compared to global markets, the retail FOMO following the initial announcement back in September overloaded trading systems in Shanghai and caused delays in order processing. The CSI 300 index, tracking the largest companies listed in Shanghai and Shenzhen, surged by 25% in just 5 days, the largest 5-day increase ever recorded. Similarly, the Shanghai Composite Index saw a 21.4% gain over the same period, marking its best 5-day performance since 1996. The crypto market's reaction to the stimulus has been swift as well. During the announcement week in late September 2024, Bitcoin rallied 6%, including a significant 5% daily candle on September 26. But wait, didn't China ban crypto? Well, despite the 2021 ban on crypto trading and mining, crypto trading thrived in alternative forms. Binance reported 900,000 active Chinese users in 2023, with 90 billion in monthly trading volume. Furthermore, P2P and OTC trading activities in China have grown tremendously, reflecting robust demand despite restrictions. If China continues to ease up its monetary policy, you can bet on some of this capital being injected into the crypto sector. Stablecoins have quietly become the backbone of the crypto world, and their market cap has reached an all-time high of over 200 billion, surpassing the peak made before the crash of Terra's UST. Stablecoins are not just for trading anymore. They are increasingly used in payments and even cross-border settlements. There's also been a mushrooming of new players in the space, from Ethena's USDE to PayPal's PYUSD, which integrated with Solana in May 2024. Then there's also major partnerships such as between Binance and Circle to integrate USDC onto the exchange. Stablecoin growth is a strong indicator of trust and adoption as they act as a gateway for more capital to enter the ecosystem. Regulation has long been a thorny issue for crypto, but 2025 is looking much brighter. SEC Chair Gary Gensler's resignation from the SEC, effective January 20th, 2025, signals a change in the regulatory tides. Ueda has just been named the acting chair for the SEC before Paul Atkins takes over in June next year, both known backers of crypto. This could bring clearer, more favorable policies towards the crypto industry. Besides that, there has been legislation proposed to further clear the air on crypto regulation in the US and take crypto adoption to the next level. On the other hand, the FIT21 bill aims to simplify and unify crypto regulation across states, reducing compliance burdens for businesses and investors by providing clearer guidelines on taxation and securities classification. This bill could significantly lower barriers to entry, particularly for institutional investors wary of ambiguous legal frameworks. Then there's also the Bitcoin Act, which proposes an unprecedented move, requiring the US Treasury to hold Bitcoin reserves, effectively positioning Bitcoin as a strategic national asset. However, However, do keep in mind that while the FIT21 bill has been passed, the Bitcoin Act has so far only been introduced. So time will tell if Bitcoin will finally make it to the US national balance sheet. Regardless, these legislative efforts are signaling a shift in the regulatory environment for crypto in the US, removing much of the uncertainty surrounding crypto, which in turn is good for adoption. Well, there you have it. From institutional inflows, easing of monetary policy, favorable regulatory legislations, and signs of crypto adoption, 2025 is looking like the year for crypto. So what's your take? Let us know in the comments below. And of course, don't forget to like, subscribe, and also hit the bell icon to get the latest scoop on all things crypto. And here's to a bullish 2025.